We have seen such volatility and really this frenzy when it comes to the commodity space. Which metals are you watching for more moves this week?
Russia is a major exporter of a number of metals. So Russia-linked metals would definitely soar more compared to non-Russia-linked metals. So these would be metals like aluminium, nickel, palladium, copper, for which Russia is a major exporter globally. So we are watching for moves in these, as well as gold, because gold strives on uncertainty. And these are the best times for gold to soar to previous record highs or pause around there.
How much is this about psychology and what we're seeing in the physical markets? Because we continue to see export volumes already from Russia and Ukraine having fallen sharply. So how much of this is really priced in?
So it is a mix of both. Prices are being affected by both investor sentiment because of the panic that in future sanctions or non-direct sanctions, self-sanctions, whatever it is, would restrict physical export of goods out of Russia, out of Ukraine. So there is a panic about the supply crunch going forward, but there is also a fundamental aspect to this because we have seen exports from Russia, exports from Ukraine being restricted at the Black Sea, where ships do not want to take goods from. So there is a mix of both fundamental and sentimental aspect to this price rally.
Where do you see, in terms of the fundamental drivers, which metals in particular do you see as really seeing that sustained pressure on the supply side, even if the geopolitical side was to be alleviated?
Well, right now, most metals are hovering around their lowest levels in terms of global stocks. So global stocks of nickel, global stocks of aluminium, global stocks of copper, palladium, these metals are all facing a huge deficit right now. So I would say the long-term outlook is definitely very strong for copper and nickel and aluminium, also because these are metals that are being used in the green transition. So in EV batteries, you would need class 1 nickel. Russia is a huge supplier of class 1 nickel that is used in EV batteries. Also, we would need copper in EV batteries. We would need aluminium in lighter vehicles. So in general, these metals already had a very positive future, a very positive price outlook in the coming 5 to 10 years. And now this geopolitical issue, this issue with Russia and Ukraine, this is pushing prices even higher.
When it comes to gold, we've seen quite a lot of haven demand, as to be expected, rallying within a few dollars of a record high. Does the Fed outlook potentially change that?
Market has most likely already priced in 5 rate hikes this year. At Fitch Solutions, we are expecting 5 rate hikes this year. So I would believe that the main drivers of gold going forward is definitely the Russian invasion of Ukraine, how it unfolds over the coming months, how it evolves. Is there any military escalation? What kind of weapons are being used in the war? So this war is definitely going to be a main driver. Also inflation, and inflation would also be driven somewhat by the war as well because of high oil prices as a result of Russia's major role in the oil market. Also commodities in general. Russia is such a big player in the commodities market, so inflation is linked there as well. So I would believe that going forward, the main 2 drivers of gold would definitely be this war as well as inflation, and the Fed rate hikes have probably already been priced in.